Okay, so good morning, everyone. Welcome to the Snapshot. It is Tuesday, February the 25th, 2025, recording this about 7:15 in the morning. Okay, guys, so let's just have a look. Interesting, we've had a couple of days of weakness in the stock market. So really the question now is this just a temporary little dip, or is this a bit more of a serious correction? So let's try and figure it out a little bit. It is difficult with Trump's volatility. Yesterday afternoon, for example, we saw him with the press conference with Macron saying that actually, for example, tariffs would be coming on Mexico and Canada. We'll see. So things like this, are definitely shaking up the market. And we have a lot of market participants who've reduced their positions and holdings and investment at the moment, just waiting for a bit more clarity. But what we do know, for example, here is that the VIX is actually settled into more of a 15, 16, 17 handle. Yesterday, you can see that the last 2 or 3 days, it touched 20. So the VIX is going up a little bit. And of course, a lot of vol-focused kind of funds, they'll be reducing their exposure. And if you actually look at the shape of the curve, it's kind of interesting just to see what's going on with the shape of the VIX curve. So we see here, if we see, so this is the spot, which is, as you can see, is higher than the front month's future. And normally, and we see that this is the live data. If you go back a day, so going back yesterday, you could see that that was the same situation, that the spot actually was higher than the first month. And that's normally a sign when it flips into sort of a backwardated shape that, the market's getting a little bit nervous and pricing more sort of volatility and fear, so to speak, or uncertainty at the front of the curve. So these levels, up and about the 19 and a half handle. And just interesting to compare that, let's say, to about 1 week ago. This is the VIX curve 1 week ago, and you can see here this is what the market prefers to see in terms of the stock market. The spot price, well below the front, the first and the second and the third month futures contracts. So you can see here that not only has the actual price of the VIX gone up from in the last week from 15 and a half up to 19 or 20, but more importantly, I would say is that the shape of the curve has flipped into backwardation, indicating that the market is a lot more alert to problems. So that's sort of a little bit of a problem. Now let's just actually look at the stock market here. And I'm going to take the cash market just because we don't have the futures sort of complexity. But here's the SPX. So if you look at the SPX here, we can see that one way of looking at it is to say that it's just been trading in a range. So I want to draw your attention here to where Trump got in. So the Trump won the election here overnight. It's like the Tuesday night here, the 5th of November. And you see the market gapped up. And for the first few days, that was, deregulation, less taxation on corporations. That was a positive for stocks. And for sure that in, let's say, the 2 or 3 weeks after Trump's election, the market did hit all new time highs. But since then, the market has found it very difficult and essentially is just trading in a range. And you could argue that, on 1, 2, 3, even 4 occasions, the market's had the opportunity now to test new highs, and it hasn't done so, especially going back to, the middle of January. The market, basically it's a triple top here. And so at that point, you could say, well, this is logical because the market is waiting for more clarity from Trump's on trade, on deregulation, on just also what's going on with taxation and just general policy clarity. But what I think that's also what's happening, though, is that the market is now starting to focus and say, well, hold on. We do seem to be having a reduced federal workforce. That's going to take, maybe 100 or 200 or 300,000 workers out of the workforce. That's going to cause a slowdown with them giving contracts out. Also, with the policy uncertainty, just reading a lot of stuff, a lot of, big companies, they're just putting their plans of investment on hold. And so all of this is starting to cause a little bit of a concern about growth. Is growth slowing down? The other issue as well is that Scott Bessent and Trump seem very, 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 very focused on the 10-year yield, not so much what the Fed is doing. And, basically the way to get the 10-year yield down is to have less growth, which would be deflationary. So, but of course, the problem is for the stock market that a story which looks more or less growth is actually not sort of a fun story. So, and what we're seeing here is that we've had a recent failure again. That's the third kind of failure to make a new high, about 2 or 3 days ago. And then on the Friday, we're starting to get some weaker sort of survey numbers, and we're starting to see this push down. Now, the question is this a buy and dip? And what I would say is that if we go back, the last sort of year or 18 months where we've had this sort of monstrous sort of bull run, as we all know, I mean, that a lot of that's been supported by the Magnificent Six or the Magnificent Seven, these mega cap tech stocks. So really, I would say that the leadership of the SPY 500 has been from the whole US stock market has been from the Mag 7. So what we really need is to see if that leadership is still happening. And if we go just like ETF, the Mags here, which looks at those Mag 7s, we can see here that the Mag 7s basically since before Christmas have not made a new high. They're pushing lower and lower highs. And we had this kind of pennant situation here, and the 50-day moving average here did not hold. And we've actually broken down pretty substantially in the last couple of days below the 50-day moving average, down outside the pennant. We're now testing the 100-day EMA, which is this sort of orange line here. And now we're coming to some reasonable horizontal support. So the point is that the Mag 7s is definitely not in a leadership position at the moment. And I would argue that until and unless the Mag 7s can be in a leadership position, we're not going to get new highs in the stock. It's going to be very difficult. And we can look at that and just have a look at some of those individual stocks here. Let's just look at them. Apple is doing okay. So if we look at Apple, that's doing quite well. But once you go into NVIDIA, they had the scare about DeepSeek. It did sort of fill the gap. But, once it filled the gap here after the DeepSeek news, you can see it's immediately been sold off. We can see that Microsoft is pretty weak. We can see Amazon is having a big downtrend. Tesla weak. And let's be honest, Tesla's CEO, Elon Musk, seems to be otherwise engaged. Google down. So the point is that even the individual stocks there are not doing particularly well. And so you have to say, well, where is this going to come from? What could happen? We have NVIDIA tomorrow afternoon after the bell, after 4 o'clock. Now, if NVIDIA says that there is plenty of investment in data centers and AI data centers, AI infrastructure, sort of a capital expenditure, maybe this could turn around the whole story for the Mag 7s. And they could begin to, sort of push up a little bit more. It'll be a sort of a feel-good story, and they could resume leadership. But at the moment, that's not the case. And if NVIDIA disappoints tomorrow, or the market believes it's disappointing, this could start to get nasty. Now, the other way that we could possibly see, the stocks in the general sense making new highs would be maybe a broadening out of the breadth. So not just the Mag 6 or 7, but a broadening out of sort of performance. But then if we go to something like the RSP ETF, which is the equal weight, we can see that too is well off its highs. And, since basically, again, the Trump victory here hasn't done much at all, sort of came off and, basically did a Fibonacci retrace here. And that's it. Couldn't even make the fib. So if we look here, we can see basically rejected at the 61.8 fib and now looking pretty weak. What about if we look at the Russell, which is the small caps? We also look at the Russell, and we see that's very, very weak here. The Russell from its highs couldn't even make, like a 50% fib retrace and has come off. So the point I'm trying to make is that the two potential factors to push up the SPY up to new highs. The Mag 7s, those huge tech stocks, they don't seem to be able to do that, and certainly are not in a leadership position. And secondly, a broad-based rally with the small and mid caps doesn't seem to be working either. So at this point, you've got to say that the SPX or SPY looks under pressure. And my personal view here is that it's broken down through the 50-day moving average, which has been a pretty good support. Next move down, in my opinion, is maybe the 100-day moving average. And what I'm looking at here is this gap up for Trump. My personal view is that it could even push down to here something like about 58.65. I think I mentioned that yesterday, somewhere around the 100-day EMA. And which would be just to test this sort of move up on the Trump election. I think really just trying to signal that, if the US government is serious, and it does seem to be relatively serious about reducing deficits, and plus you add on to that policy uncertainty, and plus you add on to that the potential for tariffs, I think the market is really trying to say, we might be getting some kind of economic slowdown here. And certainly that needs to be reflected in the multiples and the SPY. So personally, personally, my view is this is a sell rallies kind of situation at the moment, rather than a buy the dip. Now, that's not to say that there won't be sort of intraday dips, of course. And if we look at things like, I think, like the Bollinger Bands here, we've got that this is now at the bottom of the daily Bollinger Bands. I mean, could that cause a little bit of a dip, a bounce upwards? Yes. If we look at the futures, you can see that in fact it has bounced a little bit at the bottom of the Bollinger Bands there, a bit of a level. So I'm not saying that this can't have intraday sort of 30, 40 point sort of bounces, but I think overall the market is at a minimum stuck inside this trade range. Might want to even test the bottom of this trade range. Now, if we then get good Nvidia earnings, we get clarity from Trump, we don't have the tariffs. Actually, sort of the deficit cuts doesn't really translate into huge job losses. Then, of course, we can maybe test the top again of this range and maybe even try and go for new highs. But I think that's still a few weeks away. We'll keep on looking. Just in other stuff, let's have a look though. Some of the other markets doing okay. If we look at Eurex, the DAX up, so that's recovered a little bit, and generally enjoying the stability in German politics after the election. If we look at the Euro Stoxx 50. That's also up a little bit today. So, it seems to be more of a sort of a concern about the US kind of situation. If we look over in Japan at the Nikkei, that is again just trading within that range. The strong yen generally doesn't help Japanese stocks because they're expensive to buy for overseas investors, of course. So that looks as though it's at the bottom of the Bollinger here and could be under a little bit of pressure. But generally, it does seem to be a question that the US seems to be slightly underperforming. And of course, just talking about the US, remember that if you look at the seasonal, and I did have a chart, but I can't find it. The second half of February, along with September, is one of the weakest historically periods of the year for US stock performance. So it could just also be a seasonal thing as well. One thing as well, which is interesting, I'm looking at some credit spreads, and credit spreads are not bad, but I did notice that if you look at the high grade credit, so this is the LQD, that's doing quite well still. But as soon as you look at the JNK, the junk one, you see yesterday starting to come off a little bit. You see that high yield also starting to flatten out a little bit. And I just looked at the spread on the Bloomberg terminal, and it's still pretty good. Credit spreads are still very, very tight, so it's nothing to worry about. But just interesting to me yesterday that the high yield did start to underperform the quality sort of credit, and so I'm just keeping an eye on that, and that's something I think very much to keep an eye on is just this differential here between, let's say, LQD and maybe HY, the high yield, just to see if credit starts to become a little bit of an issue. Another thing which is interesting just to be reflected in terms of sort of global growth sentiment. If we start looking at gold, we know that gold obviously is doing very, very well. It could still push up to the top of this channel around about $3,000. It's not even at the top of the Bollinger Band, so it still has plenty more upside. But gold, still trading at the high, so no problem there. But what's actually kind of interesting is to see the underperformance of silver. And as you guys know, I've shown often charts that silver is usually very correlated to gold, but silver definitely sort of underperforming gold here. It sort of hit this big 61.8% fib retrace and couldn't hold it, spiked above, tried again and has failed. And keep in mind that silver, I think it's about 50 or 55% of silver usage is industrial, for industrial usages. So it's much more sensitive to the sort of economic cycle. And you can see here that silver very much underperforming gold. The same thing here if you look at copper. Copper's come back a little bit this morning, but copper again from this big fib level, going all the way back to sort of the middle of last year, failed 3 times now at this 61.8 fib retracement and just sort of pushing down. It's not to say the medium and long-term prognosis for copper is very strong. We all know there's electrification of the grid, AI, all this kind of stuff. Medium and long-term is good for copper. But just in terms of price action here, this is signaling not a lot of confidence along with silver in the global sort of economy at the moment. Other things to be looking at here. Today, we have not a huge amount of data, but we do have the conference board, if I'm not mistaken, at normally that's at 10 o'clock. I'm going to just double check that. So we have the conference board here at, so we have that at 10 o'clock. So Interesting that we have had at the University of Michigan, we've had some of the service PMIs a little bit weaker. We had the Dallas Fed yesterday, which came in weaker. So definitely some of the surveys especially are coming in a little bit weaker. And it's just feeding into this idea that there is a bit of a concern or scare about growth. So I think, this is normally a tier two data point, but I think today the market might actually look at this, to look at the confidence and see if that's, let's say, under 100, that could get the market's attention, and the present situation and also expectations. So definitely we're looking at 10 o'clock at the conference board expectations. If that comes in weaker, I think it's just going to feed into this narrative of maybe the market and actually real people, the real economy, and business leaders are getting a little bit nervous about the Trump's lack of policy clarity, the flip-flopping, the constant changing of direction, and also the fact that the Doge, Elon Musk, Besant, they all seem to be pretty happy about actually trying to cut jobs and cut spending, which of course is deflationary and ultimately is actually sort of anti-growth, and that is, as I said before, it's not going to really be particularly welcomed by the markets. Just finally, guys, I want to have a quick look here at quite interesting what's happening in Germany. As we saw that the German stocks are doing sort of okay. It looks as though the coalition of the Christian Democrats and the SPD will sort of hold. But really what the market wants to know now is the question about spending. And so we saw yesterday that there's some talk about doing $200 billion, 200 billion euros of emergency spending on defense now that the US is moving away from Europe. And of course, the thing is that's going to be impacting something like the German Bund, which you can see here is doing okay, but at what point is that going to start affecting the curve here? So you can see here that it's trading along lows, but more importantly, I just want to look at the curve here. And if we look at because the idea here is that if there is going to be issuance for defense spending, an emergency 200 billion euros, that will not be funded at the front end of the curve. That'll be funded by the 10-year, probably the 30-year tenors. And so the point here is that that should put some downward pressure on those bonds at some point, if that's agreed to, which would put upward pressure on the yield. So we could get like a long end led bear steepening of the curve, which basically, I think I've got my curve here somewhere. Where's my curve? So if you look at the 230s, so this is the 230s in Germany, you can see it has been steepening for a while, but definitely starting to steepen even more. So that could go up a little bit more, which could eventually put some pressure on the Euro stocks. But what also is interesting to me is this notion that there seems that Macron and the Germans and the Italians, everyone's talking about potentially doing a joint European, so a pan-European defense bond, and that's interesting to me because if that's possible, that's being reflected in the spread. So if you look here at the Italian-German spread, you can see that this is still only just over 1%, 106 basis points. So the Italian yield is only 1% more than the German yield, which historically is very, very low. And when you start zooming out, you can see here that we're getting to levels which are very, very low historically. And we know that the Italian fiscal situation domestically is not great. So what I'm trying to say is that if the market seems to be going with the narrative at the moment that any spending on defense, to 500 billion euros, will be shared out jointly. But if that becomes a political problem and it becomes actually very difficult for all the countries to agree, we would have to sort of start assuming, or the market might start assuming, that defense spending would become more the responsibility of individual countries. And we could start to see some of these countries like sort of Italy or France really start to feel a bit more pressure because they would individually, as individual countries, would have to start issuing their own bonds. And my point being from a trading and market perspective, that I think something like the Italian-German spread here, which, as I said, just at 105, 106 basis points, could definitely go up to 125, even 145, 150 over the next few months, if there's no political agreement within Europe about a euro bond for defense. So definitely keeping an eye on the Italian spread here. Also the French spread, which has gone up a little bit, but still not at those sort of post French election highs of a few months ago. So that's kind of an interesting one. Just finally, guys, Oil, I'm not going to say too much about oil, just down in the dumps, just pretty dead money at the moment. Again, look yesterday, trying to bounce, can only do one day, comes back down. We're only getting 1 or 2 day bounces. There's absolutely no energy here. Again, I don't believe oil should be collapsing. I do believe that the market is generally pretty balanced, but what we're seeing here is a pretty low volatility situation where the reality is that until and unless we get more information or clarity about tariffs and global trade and the US economy and potentially the Chinese economy, I think that oil will probably, find a low in the mid 60s. Who knows? Could it test down here? Yes, it's possible, but it looks as though it doesn't really want to get too much more than the mid 70s. So it's probably just going to trade in that sort of $10 band. Let's call it, 65, 66 to 75, 76. A pretty low volatility there. So not a huge amount of energy there. Just finally in the FX. We saw yesterday a USD CAD just going a little bit higher, just because Trump, in one of his offhand comments, did say that tariffs on both Canada and Mexico are still on the table. And as we know, that 1 month reprieve is due to end. I think it's going to end on Monday. Trump's saying that there could be an announcement by this sort of Friday or this weekend. And again, that's going to be fairly binary. If he does put those tariffs on, I don't believe they're priced in at this point. As you see, this was the tariff scare pushing USD CAD all the way up to 147, 148. The tariffs weren't put in. We had a 1 month reprieve. And so obviously that sold off 500 or 600 ticks. But now the market's sort of getting very comfortable. But if the tariffs are announced by Trump, and I don't think that's going to happen, I think there's going to be some kind of compromise. But definitely there's a potential upside on that. The same thing with Mexico. If we look, this is on the futures on the Mexican peso. Again, Mexican peso sold off a lot, but pretty stable at these levels. And we know behind the scenes that the president, Scheinbaum, is basically saying, hey, we're doing deals behind the scene. We're negotiating. Her trade representative is in Washington at the moment. So I do believe that probably what's going to happen, we're going to start getting some kind of compromise announcement on deals later this week, maybe Thursday, Friday, maybe over the weekend. But there's still the risk. And if Trump does decide, just to make a point, to impose those 20 or 25% tariffs, we could have a lot more pain in the Mexican peso. And of course, in CAD, which is looking quite relaxed. And we could definitely see CAD up to, let's say, 143.5 or 144, or who knows, maybe even push a little bit higher. Just finally, just looking at the euro and the yen here. Euro having, it sold off here. This is a very big level, the 105. As you can see, it's kind of like a quadruple or a triple top. I mean, is this a reverse head and shoulders here? Maybe, but it's just going to be hard to push up because if the Eurozone is spending more money on defense, that at the limit is good for defense stocks, but I don't know if that's great for the euro as a broad kind of growth story. It's more of a sort of a desperate, individual, like a sector, good for sort of a defense stocks kind of situation. We still have the threat of Trump, and we still have weak exports. And a weak internals in Europe. So I think if the euro does get up a little bit higher here again at 105.5 or something, again I think it's a good sell. Which is not to say it can't go up a little bit today. As I say, we have the conference board. If the conference board shows some pretty weak sort of numbers today at 10 o'clock, we could have some US dollar weakness. So, on the back of that, we could see the euro going up 30, 40, 50 pips. But I do believe that the serious institutions that they're selling it here. You can see here, it's going to be very hard so far to breach. I mean, what is the exact level on spot here? We've got 105, 1.053, something like that is definitely an interesting level to be selling. Same thing for the yen. We see the USD yen, which is here. Again, showing it just a little bit of a bounce here. As I think I showed yesterday, we've got a big sort of Fibonacci retracement here, 50%. If we go all the way back to mid-September and the highs, this is a 50% Fibonacci. It's also the bottom of the Bollinger Bands here, so it's getting a little bit overextended. And there's also, it's a pretty key level here. It's like a horizontal support 4 times. So it would not surprise me if the US dollar it bounces a little bit here. But I think in general, the US dollar is going to be okay over the next few months. But with the exception of Japan, it's an idiosyncratic story. We have the Bank of Japan, we have inflation rising in Japan, and we have, as I said, the BOJ kind of probably hiking once, if not twice. So I would sort of leave alone that unless you're sort of shorting something like the euro versus the JPY. And again, euro JPY, if, and I don't think we will, but if that were to go up to, let's say, this 160.2 level, that would be a very interesting level to short. Even this recent little mini high here, 158.25, could be not bad for a sort of intraday kind of trading. But definitely this level up here, 160.2, would be great, just because the fundamentals over the next 2 or 3 months, I think, do favor Japanese yen over the over the euro. Okay, guys, I'll leave it there. Have a great day. As I say, watch out for 10 o'clock. We've got the conference board. There's a couple of Fed speakers. And also, of course, we have our friend in the White House who at any moment could drop some tariff bombs in favor or against. We shall see. Okay, take care, and we will talk later.